The approved bond sale parameters for the 2015 financing, which I discussed previously, is $50 million from the 2010 election. This will be the Series C issuance, and $85 million from the 2012 measure. This will be the Series B issuance, totaling $135 million. These will all be current interest bonds with a fixed rate, having maturities up to 40 years. There will be no capital appreciation bonds included, and the underwriter's discount has been set at a maximum of $5.25 per bond. And then we quickly look at for both measures as far as the structure goes. And what this page does a good job to address is why the 40-year term, given the $48 tax rate and 4% target. Now, when you're talking about issuance cycles of every other year, you want to ensure that there's not too much debt service pressure which locks us out of that remaining authorization. So by going out for a longer period of time, you have less debt service stacked on what's already outstanding, allowing us to access the every other year issuance cycle. So where the green and the yellow bars on these pages represent the new debt. If we were to go for a shorter term, those bars get higher and create less capacity and less ability for the district to access that remaining authorization unless you see something greater than 4% assessed valuation growth. So the structured decisions that were made by the board back when these were brought in 2014 and during the planning process were made, those decisions were made in order to create flexibility for subsequent series of bonds. So again, the resolution that will be brought to the board tomorrow night addresses an updated preliminary official statement, which will include new information. That new information is the 2013 audited financials, the 14-15 first interim report, and also includes information on the governor's 2015-16 budget.
So if I'm understanding, then we've already approved the sale of these bonds, but we're updating the information based on this information that you just reviewed on this slide.
Correct. You want to provide the investors with the most up-to-date and accurate information possible before going out to sell the bonds. And so this is a function of substantial changes, including this, within the POS. So going back to the board and seeking approval to do that.
Thank you.
Just a recap of the ratings that were received. This was not shared with the new board at least, but we're very happy to report that the district has once again sustained good credit ratings from all three rating agencies, with AA3 from Moody's, an A+ and A+ from S&P and Fitch, respectively. Those are certainly something to be proud of. One of their key highlights within their rating report suggests strong fiscal management within the district and maintaining a good level of reserves as the economy is starting to recover. They commended the district to not quickly spending down the reserves that were held over those recession years, and that certainly bodes well for the credit ratings. So.
Do you believe that the credit rating really affects the sales, since these kinds of bond sales are very attractive to the buyer?
The credit ratings absolutely affect the bond sales. It will impact primarily the types of investors that are interested. When you're looking at very sophisticated institutional type investors that either manage large insurance funds or mutual funds, there really is a plethora of options for them to consider when investing those monies for very long periods of time in a very diversified investment portfolio. And so these credit ratings allow them to filter through all of those different options that are out there. So they make a great, they're a big deal.
Thank you.
And then just a quick overview of the financing schedule for the 2015 issuance. Going back to the September for the initial planning, we followed that with bringing items for information and then approval in October and November of last year. Looking forward to tomorrow's date on February 11th, bringing an item for an updated POS. We would look to post the POS later this week, should the board approve it tomorrow night. And once posting the POS, we would go through an investor outreach process in order to gain interest in the district's upcoming bond sale, and tentatively targeting to price, which is really going out and selling the bonds, on February 26th, and closing roughly 2 weeks later. And then ending just with an overview of the market. Generally speaking, we're seeing historically low interest rates. Last week was interesting where we did give some of that back. January really saw some all-time lows. It was a combination of plunging oil prices, some global economic activities which were drawing investors to safer investments, treasuries and bonds. Although with oil prices somewhat turning around and the jobs report looking pretty favorable last week, we did give some of that back, but generally speaking, rates are extremely low. It's a great time for districts to go out for these types of bonds. So we're anticipating a favorable market when we price. So that concludes both presentations. Thank you for bearing with us. If there's any questions, we'd be happy to address them.